Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. If my next guest looks a little familiar, it's because Mr. Don Thornton has been with us before. And if you don't remember, Don is a real estate investor. He is a consultant, a coach. He helps people with real estate planning. He's done over 3,000 flips in his career. So really well-rounded individual. And we had him on the podcast last time because he's become a bit of an expert on a topic about the Corporate Transparency Act. Mm-hmm. And if you remember the end of the year last year, there was a lot of back and forth. We didn't know if it was in effect, if it wasn't. So I asked Don to come back, and thankfully he's able to join us today. Don, thank you so much for being here.
Thanks for having me. It's always a thrill to be here.
You got it. So about a year ago, we had you on, and you came in and you were talking kind of gloom and doom about the Corporate Transparency Act and how it's really kind of, gathering information with not really knowing what was going to happen, right? What was going to happen with that information. Mm-hmm. And so why don't you bring us up to speed on what the Corporate Transparency Act is, what its initial intention was, and what's developed since then?
Okay. Well, I don't know if it was all gloom and doom. Maybe that's just my personality. That's always a possibility. But no, actually this time last year it was looking pretty gloomy and doomy. And it's the Corporate Transparency Act, in my opinion, is one of the worst laws that were ever passed. And before everybody starts blaming Biden, yes, he signed it into law, but it was definitely a bipartisan shank job in the back to small business owners because it had votes on both sides. Now, a lot has happened since then, of course. Now, it was passed in January of 2021. It was set to come into power on the 1st of January 2024. Now, and the stipulations of law the law allowed anybody with an existing LLC or corporation, whether it be S corp or C corp, basically any organization that is required to register with a Secretary of State of any state in the union is required to register. The ones that were already in existence before before the end of 2023 were given a 1-year grace period to fill out what they call a BOI report, a BOI, or beneficial ownership information. The idea behind this, and there's always good ideas, and in practice they're not always good. The idea was that drug dealers, terrorists, money launderers, anybody who's running foul of the law pretty much was using LLCs as shell companies. And then they extended that to other corporations and then pretty much anybody except for a group, about 23 exemptions. And there's a whole bunch, insurance and banking. But trust me, small business was not in that exemption list. Okay, you know that. So during this whole last year, a lot of denial going on, a lot of people putting their heads in the sand, a lot of people just praying for a miracle, praying, Hail Mary, saying, hey, let's hope this doesn't work out. Well, as we know, the election happened and there's a new administration. The administration did not give any indication while it was in the lame duck period about what it would do with this act. The Biden administration kept pushing it. Now, there had been a court ruling saying that the Corporate Transparency Act was unconstitutional. But that was a lower court. And we always knew, and I was always telling people that were asking me what's going on with this, what do you think? I always said, First of all, it's law until it's not. Second of all, they're going to appeal. Regardless, whoever loses the first round is going to appeal. And that's what happened. So the appeals court reinstated it and said that they had to move forward. And then, it's funny.
What was the timeline on that? When did that court?
This was all. That was last spring. Last spring.
Okay.
Mm-hmm. So this entire time, the appeals court didn't rule on it until December of 2024, saying that we had to do it again. And then there was another quick ruling that said no, it's not. They put a stay on it basically. So they didn't make a decision yay or nay, constitutional or not. They said we're going to put a stay on it. So what was interesting was that the Biden administration lost the election. Obviously, their people are in Treasury. We're in Treasury at the time. And they pushed that really hard. And I thought that was strange because you got weeks to go, before someone, a completely different administration with different philosophy comes in. Why not just kick the can to them? But no, they were very aggressive in continuing to push this. Well, it looked, so Treasury came out and said, okay, well, you've got until the end. Now you got until the end of January, to do it. And then it was like in February, and then it was like in March. And so they kept pushing it back. So no one knew what was going on until the latest announcement that happened last week. Everybody, the sort of Damocles over everybody was you had until around the 17th of March, St. Patty's Day, before you were going to be in violation of the law. So everybody's like going, what's going on? Well, finally, the Trump administration, the Treasury Department or the Trump administration, issued its first press release concerning the Corporate Transparency Act. They were absolutely silent about it until then. Okay, I guess Greenland and Canada was more important than the Corporate Transparency Act. Well, whatever. Everybody has their own priorities. So the Treasury Department came out, I believe it was dated on the 2nd, and March 2nd, and they said that they are not going to enforce the Corporate Transparency Act. And so any U.S. citizen, any domestic reporting company is not going to be required to file any BOI reports. The press release also talked about how the Trump administration's goal is to limit legislation, regulation that hinders small business, and so on and so forth. So what was interesting about this was that they are dropping hints in that press release that they're going to keep the BOI requirements for foreign entities. But as for domestic entities and U.S. citizens, as of right now, they're saying they're not going to have that. Now they have not come out and said what they're going to do. Are they going to, request their, Republicans in the House to legislate or law that would remove this as a law? They haven't said that yet. They've said that they're going to put together something soon that will do something new. They'll have a new I don't know if it's regulation, a new interpretation. I don't know. But right now, the Corporate Transparency Act is still the law of the land. The only thing that's changed is now the administration says we're not going to enforce it. So
and the big thing there is the fines.
It's still in limbo.
Right? Like there was going to be these big fines for people who didn't file. Mm-hmm. Right? So people aren't incurring any fines. No. Right? That's the truth.
That's the truth.
But let's talk about where you thought, like, why was the Biden administration really pushing it toward the end of their presidency, their administration? Because I felt like the initial intention was never just to protect for like money laundering and those sorts of things that you mentioned. That it really was just an information grab. They wanted to see who was behind all these different LLCs and corporations, And they had their reason, which they said it was, to protect fraud and money laundering and all those sorts of things. What's your opinion about that? Like, why do you think they wanted to do it in the first place? And maybe that's why they were pushing it toward the end there, because they felt like they could still get that information before they were out of power.
I think it was very clear what their motivation was from the very beginning back in 2021. They came in with a very strong agenda to go after tax cheating. And as opposed to previous administrations that, Republican and Democrat, I'm not being bipartisan here, a lot of the resources that the IRS had tended to be focused more on the lower end of the tax bracket. In fact, if you looked at statistics, more people under $100,000 a year in gross income were getting audited, much more than the ones like the top 15% of the tax bracket. The Biden administration said we want to come in and we want to make this more fair. We want to make the rich pay their fair share. There was very much a taxation orientation. That rhymes. A taxation orientation towards the rich. Okay, and they were doing that. And of course, they also with the Inflation Reduction Act in 2022, they put billions and billions of dollars into the IRS to improve its infrastructure, its digital capabilities. They were going to hire, or in the process of hiring, or did hire, close to 80,000 new agents. And their public stance was that they were going to go after the big dogs. Okay, but again, that's one aspect. So I'm putting that into perspective. Okay, so they had that agenda on the one hand, with the going after the high taxpayers with a lot of revenue, and they felt like they weren't being paid attention to, and that they could get more bang for their buck going after them. On the other hand, their rhetoric was anybody who made less than $400,000 was not going to have any issue with the IRS, would just go after the big guys. And yet they bring in the Corporate Transparency Act, which directly goes after who uses LLCs. A lot of mostly small businesses LLCs and S corps and C corps. That's just the bottom line. So it was I think it was very much mixed messaging, and I just think that there was more of possibly a backlash from the Trump administration's first term, because there was a lot of deregulation, huge tax cuts going to the richer population of the U.S., corporations, and so on and so forth. And so they were going to come in and I think really try to, even the books a little bit. But to answer your second question, why were they so adamant about continuing this when the clock was running out on them? January 17th was it. You're gone, right? And only thing I can say is something similar was happening in the Treasury Department about crypto. They were still trying to push lawsuits against XRP, for example, all the way to the very end. And it made no sense. I wish I had an answer for you. I don't know. It was baffling to me.
And it could be, too, that they were just trying to do their jobs while they had time to do their jobs. And whether it was going to end or not, maybe they weren't looking at it as like a political advantage. It's just, okay, we need to execute what we were put here to do as our jobs, and we're going to continue to do it until, we're replaced, basically.
Yeah.
So it was, I remember looking at where I saw the most news about it was on TikTok.
Oh, yeah.
And it was like everybody had their own opinion about it. And then, one video it's on, the next video it's off. It's going back and forth. The comments, everyone was like, what do we do? And pretty soon people were just like, I'm just going to wait. Right. So most people, and I don't know what the percentage is, maybe you've heard, didn't file the BOI.
Right.
Do you have any statistics, or have you heard about how many were actually filed versus what's outstanding?
For me, I'm sure I share with you what I did. I mean, I I got my stuff. I closed down my S corp, and I put everything into an exempt entity, a trust, because I did not want to have anything to do with that law. And so now I don't have a corporation anymore. I'm not going to go back because, here's the way I think about it. It's law until it's not. And so let's say that in 4 years, then the White House is now occupied by a Democrat. Who knows, right? 4 years is a long time. If it's still on the books, people are still vulnerable.
Mm-hmm.
Until there is a law that supersedes it or annuls it, it's still the law of the land. It's just not being enforced. That still makes me nervous.
Right. So let's go to the other side.
Sure.
Which is like people say, well, I haven't broken any laws. I do my taxes the way I'm supposed to. Mm-hmm. I'm just going to file it. I'm just going to file the BOI. I don't want to bother with it. So what danger are those people in if they've never broken a law? Why not just file the BOI and be compliant?
For me, the danger was by voluntarily giving my information to the IRS, to FinCEN, to the Treasury Department. It's all one big glom of information. You're being put into a separate database, a database that has never existed in our country's history, where small businesses are now being scrutinized. And the danger for me is that, or any other investors, is if you're more of a sophisticated investor, and a lot of us have been, especially in the real estate game. If you make money in real estate, then you learn to use LLCs, and you learn how to have all these intricate, let's put it in real English, shell companies, right? The whole thing. It's a shell game in a sense, because you're trying to make it more difficult to track what you have. And I would dare say that the majority of those types of entities in the United States are being used for perfectly legal purposes, what the law is allowing. I mean, any real estate investor who's making money and is worth his or her salt has got some kind of a protection way to reduce their taxes. I mean, we are okay. That is absolutely 100% legal. There are IRS findings, there are resolutions, there are court cases that have made it very clear that if you try to avoid taxes with a legal way, you're fine. It's when you evade them illegally, that's when you get into trouble. This was and still is a legal way to do things. I think that you were right in the very beginning when you said they want to get a look at things. They want to have a database. The danger for this is that, okay, I have all this stuff. I have properties, I have other investments, I have crypto, and so on and so forth. The way it's been until recently is you could not make things obvious to the government. Every LLC, every corporation has different tax returns. It's not easy to know how things work. You don't. It's like when you're playing poker. You don't show your cards to everybody, do you? You want to keep them together. You want to keep them close to your chest. It's the same principle. So by doing this, by telling the Financial Crimes Investigation Unit, our network, FinCEN, that, okay, all of these people are beneficial owners, including the absurdity of people that put the LLCs together. They're now considered a beneficial owner of your company. You have to report them. And all these things that are just nuts. Now, it just helps them find everything. And that's the first thing. The second thing is that because you're in this closed database, then you're easier to scrutinize. And I don't know about you, but I feel like if the government really is trying to go after me, they can find something, no matter how good, how law-abiding I am. I just feel like that they can get down there and start turning rocks over and so forth. I'll never forget my first mentor back in 2002. He's a foreclosure guy, like I became a foreclosure person after that. And he told me, he says, Don, never get in a courtroom. He said, settle, even if you're completely right, settle. Because there's this thing called discovery. And he said, you don't want anybody going through your books, no matter how clean you are. And that's my response. It's like, you know what? Do you really want to have a financial enema going on? A colonoscopy? That's what that would have been, because they can go in there and do that if they kept going with the way this was developing.
Right. So one of the things that I've heard people say is that a lot of these bigger corporations, they were starting to comply with this kind of, what would you call it? Like a world philosophy of, have you heard of ESG before?
No.
Don?
Oh, sorry. No, I did not.
You've not heard of ESG. So ESG is this, it's an acronym. It stands for environmental, social, and governance.
Okay.
And it's basically a set of metrics, like a whole new way of measuring a company's worth by how they rank, basically, in the company's sustainability and social impact. And so it was really starting with like the World Economic Forum and some of those larger world organizations, World Trade Organization, and they wanted to measure all companies based off of their social impact. And it was a way of basically regulating companies on a whole different level on whether they thought they were being woke enough. And some people said, okay, this is just them a way of like lowering the tier to where they now could create a new database of companies and then use ESG to regulate those companies as well. Now, I don't know if that's true or not, but have you heard of anything like that?
No, I haven't. I think that, and you got to remember, in the Corporate Transparency Act, though, most major companies, all major companies are exempt. There was that income level, right? They made, if you had receipts or revenue of over over 2 million, you were exempt, or over a certain number of employees, full-time employees, and you were exempt. So it didn't concern those bigger companies anyway.
Yeah. So the people that did file, what's going to happen to those people? Are they at any risk right now? Or they're just on a database someplace?
They're in a database, and I did not want to be in that database. So I'm glad I made my decision. And I would advise anybody that if they have the opportunity, they'd still do something like I did, because it's better to be completely off the radar from that point of view, because you just don't know what's going to happen. I mean, I can only deal with what is, okay? And what is, and I repeat myself here, apologies for the redundancy, it's still the law of the land until it's not. And administrations change.
Right. Is there any talks of that being pulled from the books? Is anybody speculating that
so far they're
not just going to not enforce it, they're going to remove it altogether and take it off the books?
I have not heard of any legislation that's being planned to be filed. I think the Trump administration has a whole different agenda right now that they're trying to do, and I don't think that's really on their radar.
Yeah. Well, time will tell.
Yeah.
It sounds like it's not something that they're worried about. And if the true intention was just to figure out a way of taxing people more money or corporations more money, well, we know that this administration isn't as, I guess, driven by tax revenue as the last one.
That is true.
Right. And they're even talking about doing, $5,000 refunds to taxpayers potentially with this Doge work. Because they're finding so many places where we were just overspending, there's fraud and abuse. So, this administration has a completely different perspective on tax revenue.
I agree. I'm not that worried about anything right now. I still would like to see it off the books.
Yeah.
It's kind of,
so you said, what's that, Don?
It still is like half measures to me.
Yeah.
I like to see it off the books completely.
So tell us how you solved it for yourself, right? So this is one of your expertise. So you went and you closed out all your other corporation structures, and then you went and you did a different kind of structure that would give you more protection.
I got a contract law, non-grantor, irrevocable trust. And so I have two of them. I have one for my passive income and my assets. And I have one that I strictly use for all intents and purposes as a business trust, where I run all my active business revenue through it. What's interesting about this trust on the business asset, the business revenue side, is that it is almost exactly the same as how I used to run my S corp for my real estate business and my consulting businesses. It was almost the same, and right down to the fact that when I filed my tax returns for my S corporation, any money that was taxable came down to my social, to me personally. And so, I was never any taxable income that was owed on the S corp side. Well, it's the same thing with this type of a business trust, in that at the end of the year, you're going to distribute down to whether it's your personal trust or to you personally, and it's not there's no tax there on the business trust. So for me, it was just like boom, I got it immediately. Instead of it being blank blank ink, it's now a blank blank trust. And I don't sign as president anymore. I sign as trustee. But that really was it. But it was nice. The biggest thing that I love about this is that it cannot be found in any division of corporations or Secretary of State website. So if you go into like Florida or sunbiz.org, which is Florida's division of corporations, and you put in my company name, from 2003 on down until I closed it, every single annual report's there, all my officers, addresses, so on and so forth. It's right there. There's not a shred of information about my trusts in public record.
Right.
Which I like.
But it's still a viable,
sure,
and recognized structure.
Yes, absolutely. My trusts have EIN numbers. We file a tax return, a 1041 tax return, 1040, every 1041 every year. So it's just more private than other ones.
Right. Mm-hmm. Was there any challenges getting a bank account?
Nope.
So you just give your EIN number.
Mm-hmm.
I think last time I formed a bank account, they wanted my operating agreement. Does that still apply with the trust?
They want to see the certification of trust and the EIN number, or the EIN certificate from the IRS.
Yeah.
Yeah, it was. it takes a little bit longer, I think, maybe than I don't know, maybe not. I formed my bank account in 2003 with my S corp, so I don't even remember how long that took. But it was it's just like going in and open up a bank account anywhere else.
So you get the benefits of both worlds, right? You get the privacy because everything isn't out there and you're not put into some database, but you can still operate as you normally would. You don't have double taxation.
Right.
And you can have a bank account, so you get all the benefits of both of these. Is this something that's expensive? Do you have to have like a high-powered attorney to form one of these things? How do you do it?
No, they're contract law trusts, so it depends on who you go to. Okay, so right now, I don't mind disclosing this on in public record, but I was out of action for over a year because I was recovering from a stroke. So this is actually my first public appearance since then. So congratulations.
Congratulations on getting better. We're glad to have you back.
Thank you. You couldn't even tell I had a stroke, could you, just by listening to me? Probably. I hope not.
No.
My eyes are darker, but when I had it, my left arm, I could hardly use it, and it went completely numb, and I could talk, but it was very difficult. I told my friend recently that it was like going from an MBA level education, speaking 3 foreign languages, down to about a fourth or fifth grade level.
Oh my!
And what I forgot so much, or it just wasn't there. It wouldn't come. And so, with a lot of help, what really helped me was a lot of sound therapy to help with. I don't know the ins and outs of that, but it was recommended that this possibly could help. It really did help a lot, but it wasn't until about a month ago that I started feeling like I could go back, because my arm was fine. You know, I went all this time. When I was able to go somewhere, I could only hold anything in my right arm, not my left, or I could very lightweight. I couldn't do everything. So now it's fine. But
Thank God.
yeah, no, it's I dodged a bullet there. Let me tell you something. What's interesting is that it didn't happen here. It happened over in Russia.
Did it?
Let me tell you something. The last place you want to be if you're having a stroke is in an ICU unit in Russia.
I'm sure that's a whole different story about what you were doing in Russia.
Well, my family's from over there. My wife and my 2 kids are there. Yeah, I mean, until the war in Ukraine started, I was going back and forth all the time. You know, in fact, I was getting ready to retire there until everything started, so that I had to put that off for a while. But it just so happened I was over there visiting. You know, our birthdays are on. We're in this time of the year, so we were going over there. It was my 60th and my wife's 50th, and that was going to be a big deal, and then all got ruined. You know, sorry, honey. But I had to come back here. I didn't want to stay there. But let me tell you something. Listen, they did a great job. They took care of me. I have no complaints. It's just not the same as here. Okay.
Right.
It's just not the same. Plus, you got to remember, here I am in in ICU, and I'm trying to remember Russian because my head was all messed up. You know, I was struggling to speak English sometimes, and I was having to talk to them in Russian. So it was difficult. It was definitely a challenge. But all's well that ends well, and luckily, like I said, I dodged a bullet, and I rambled on. I forgot your question. I apologize.
No, well, you mentioned about it's been a year, right? Because you had your stroke.
Yeah.
And so it's been a year since we talked about it, and a lot's happened since then.
Right.
But thank God you're okay. Like if you hadn't said it, I wouldn't have known that something so traumatic had happened to you. So congrats getting back.
Thank you.
Now is it going to be business as usual now for you, or are you changing anything? Did that maybe near-death experience change your outlook on anything in your life that you wanted to reprioritize?
I doubt I will be doing much real estate investing, hands-on real estate investing, pre-foreclosures, going out to houses, checking them out, all that kind of stuff. I don't have that anymore. That's done. I'm leaning more into consulting, teaching. In fact, on the week of the 9th, 10th, and 11th of April, I'm going to do a three-day master class teaching students about how to do, just basically recreate how I've made my money over the years. And it's funny, I was looking for something that I could get into, but wouldn't be too taxing for me. And so I have the consulting business when it comes to helping people protect their assets and everything that goes with their privacy and anonymity and all that kind of stuff with these trusts and so forth. But I wanted to help real estate investors as well, because I did really well in real estate as an active investor, and I'd like to see people leverage what I've done. I think a lot of my systems definitely work. I don't really see a lot of people teaching how I did them, and so I want to be more as an active coach for people. So that's probably the thing that's changed the most. I'm kind of returning to my roots a little bit in my consulting side of talking more about real estate as opposed to just financial protection, asset protection, and so on and so forth.
That's great. So any advice for people who are thinking about this Corporate Transparency Act potentially coming back? You mentioned that you went and you got this new trust. Is that something that just the average person can do? Do they go to
I know
their
what
local
I know
attorney?
what I was. Thanks for bringing back that. What I was saying is that as a celebration of me returning back to the fold, as it were, my partner and I are doing a 50 trusts in 50 day promotion, where we are drastically lowering the acquisition price to get into a trust. So if anyone's thinking about or has thought about doing this, you need to reach out to me because we can hook you up. Because we're, God bless my partner. Her name is Janine. She had to take everything on when I had my stroke, and so we were just dealing with that. That was the thing we had to deal with first. And so now that I'm back, we want to celebrate and say, okay, let's just have a big promotion, help people get in, and then as we get our business back to full speed like it was before it happened. So I can leave my contact information with you before we go, and people can just contact me directly, and we can talk about it. Just have a quick interview, and if you want to move forward, I don't want to sound like a used car dealer, but I do want to say we want to help people get into the trust. We really do, and we'll do what we can to get you in, and you'll be shocked at how economical it is to get in during this promotion.
Oh, thank you for doing that.
Yeah.
That is an exciting way of celebrating, you coming back, and also it's timely, right? Because, there's still lots of benefits here that people can get from a trust like this that has nothing to do with the CTA, right? That was just one of the reasons why it makes sense to have an entity like this. Any other benefits that you think people should know about besides what we've already mentioned?
Yeah, one big one, and this is another reason why I was happy to get out of my S-Corp into a business trust, is that these entities are so much more difficult to sue. The structure themselves make it very, very, very difficult to even get a lawsuit started against you. You're a walking target as a S-Corp or C-Corp. There's not much in the way of that. But a lot of times people, when attorneys find out that whatever entity we're thinking about trying to go after, and they see that it's a contract law, non-grantor, irrevocable trust, that really goes a long way to saying, okay, well, I want to deal with this. Because let's face it, they go for the low-hanging fruit. These are much harder nuts to crack than you're going to find. Even these intricate things, with LLC, holding company, and so on and so forth. By the time you get into that, it almost gets too unwieldy to use. You have one entity, one tax return. That's it. As an investor, okay, I used to use LLCs back in the day. If I have 15 properties, I had them in each LLC. Well, each of those LLCs have to have a tax return. I got to pay an accountant for each one of those. That was one of my biggest costs of business, was paying the accountants for all these LLCs I had out there. Now, I just have them in one, because I got that they're private, they're not anywhere in public record, and they are extremely difficult to sue. And so it just made more sense. I was saving a lot more money and less headache, and I was more anonymous, more invisible than I was doing the LLCs.
So one of the reasons why people would do an LLC for each property is so you could insulate any liability if there was, like a trip and fall sort of scenario. If you have all your properties underneath one entity, are you violating one of the major benefits of having an LLC and to isolate and insulate that liability?
Yeah, your asset's actually better than this because they can't crack it. As far as I know, and obviously you hear me, I know a lot about these trusts. And I've talked to attorneys that have been involved with it for 70 years. Obviously not the original ones. But as far as we know, not one time has any of these trusts ever been cracked with a court turnover order in any way, shape, or form. It just hasn't happened.
So one of the challenges with LLCs is making sure you're maintaining all the things you need to do for it to be like a legitimate LLC, right? Like you have to have minutes and you have to have your operating agreement, and you can't do commingling of funds. So there's all these things you needed to do so that the corporate veil couldn't be pierced.
Yes.
Do you have those same kind of things you want to abide by with this structure?
Yes and no. They're not nearly as stringent. You don't have to have minutes, things like that. But, if you're doing something, like, for example, I have a relationship between my personal trust and my business trust. My business trust runs the active revenue side. My personal trust is a beneficiary, all right? So there has to be an agreement between the beneficiary and the parent business trust. Yes, you do have to have that. You still have to follow good accounting principles. I have two accounts for each trust. I have an operating account and I have an interest bearing but non-cash withdrawal type of thing. I mean, I don't have a debit card. I'm not using both, right? Or if I have my operating account, I can't have anything with personal at all. And so if it is, then it has to be distribution down to my personal trust or to me personally, and that's how you do it. So yes, you do have to have. But for me, as someone who had a S corp for 20 years, I guess, I was so glad to get out of the tyranny of the minutes. Oh, that was such a pain in the butt. It was such a pain in the butt.
Oh yeah, and most people just don't even do them.
Yeah,
right.
Well,
because the chances of them needing them are slim to none. But that's the whole reason why we look for these kinds of entities, anyways. Because
right.
It's sort of like insurance. Like you want to be protected just in case.
Right. What's the point of going to the expense of having one if you don't keep up the minutes, and then you're vulnerable? Kind of defeats the purpose, right?
Yeah.
But people get lazy.
Any drawbacks that are worth mentioning?
No, not really.
So there's no negatives.
Not that I've seen. I mean, just don't go crazy. I mean, there's people, sometimes will say, well, you can use this and not pay any taxes. You want to go to jail? Go ahead. Just follow solid accounting principles. There's more than enough ways to, to do your accounting in a way that will lower your tax burden, but lower, not eliminate. And anybody who's telling you that, it doesn't work.
Are there any additional tax benefits?
The biggest one for me, I would say, is that it adds another layer of expenses that reduces my taxable income. That's the biggest thing, because in my S corp, I mean, as a real estate investor, we love expenses, right? That's all we do is expense out everything we can reasonably. We can make a reasonable case that this is an expense. Well, when you put in the trust there, then you have an entirely different level of expenses that are trust expenses that are perfectly legitimate and are not, basically they're write-offs, if you want to put it in a term that we all understand, like for family expenses and for minors and so on and so forth, lots of different things you can do that you could not get away with in an S corp or a LLC. There's no way.
What are some examples of those?
Well, for example, my grandson is a beneficiary of my trust. So as a minor, then the trust pays for all of his food, all of his clothing, all of his education. And even though he's be sick soon, I mean, we've got him in. My daughter, we had her in private school since she was in kindergarten, and we're going to do the same thing for him. So all of that stuff, is there anything having to do with his education? And education can be a wide topic, right? So the trust pays for all of that because he's a beneficiary, a minor beneficiary. That's an example.
Interesting. Yes, there are some additional things there. Is there anything you don't get the benefit of having this that an LLC would get?
Well, as a trustee, I cannot expense out anything I do that is not directly tied to the business of the trust. But again, my trust do so many different things. And as the trustee, I am in charge of managing the trust and all its assets and all its revenues on behalf of the beneficiaries. So I could not get my food paid for like my grandson does because he's a beneficiary, he's a minor. I'm not. However, again, this goes back to my experience as an S corp. As long as I can make a very good case that what I'm doing and where I'm at or whatever is for the upkeep and management of the trust, then that can be paid for.
Right.
So I'm actually not doing anything differently as trustee than I used to do as an S corp, as president of the S corp, from that point of view. But my wife, my daughter, my son, my grandson, anybody else I make as a beneficiary, the trust can do much more to pay for their stuff. And for family people, it's really, really nice.
Is there any sort of red flags from somebody who's on the other side, like an IRS person who's looking at, okay, who's going to get audited today? And they see this trust. Does that one kind of float to the surface? Like, well, why wouldn't they have this special trust? Like, let's look into it more.
No, these trusts have been around for 70 plus years. IRS knows about these trusts. The only thing that you have to worry about is the people that are out there saying they turn a tax return in for $0. I mean, you're just waving a red flag. You're just waiting to get chopped. And there's people out there that will do that. And, I don't recommend that. Not at all.
No.
Pay your tax. Pigs get, what do they call it? Hogs get slaughtered, right?
Yep.
Yeah.
So it certainly seems like there's way more benefit than there is negatives. I mean, you couldn't even name one. It's just that it's new, right? And so anybody out there who's listening who has questions about this specific kind of trust, then you should reach out to Don. Don will put your contact information in the show notes as well. But how can they find you if they want to go and just try to research a little bit more?
Well, unfortunately, because I'm just coming back in, we are completely redoing everything. So we're putting a new website up, different landing pages, information pages. I stopped doing any social media over a year ago. So that's all being rebuilt. I would say that right now, just look, I have no problem. I'll give you a cell phone. Just reach out to me, send me a text, call me. Text is better. But hopefully by no later than the end of April, we'll have everything back up again in full speed, and I'll be easily found. But right now, I'm kind of still a little bit in limbo. Got it.
Okay.
Yeah.
Well, great, Don. Well, thank you so much for coming back and giving us an update on the Corporate Transparency Act. And thank God everything worked out with your health issue. So if anybody's interested in learning more about this specific kind of entity structure, it sounds like there's some benefits to it. Definitely do your research. But Don is the authority when it comes to this sort of thing. So reach out to Don. And Don, thank you so much. We really appreciate you coming back.
Thanks a lot. I love being here.
Awesome. All right, everybody. Thanks so much for listening to this edition of the REI Hacker Podcast. Keep an eye out for more great guests like Don on future episodes. And we'll see you next time. Take care.